our Toast webinar series. Let me just get the slides 1 second. Okay, so hopefully you can see those. So this webinar's or masterclass topic is on the end of year ready and building money confidence for 2026. So you'll notice that we have Oisin joining us as opposed to Stephen. Stephen, unfortunately, has a very poor excuse of having a second child, so he can't join us today. But
That
we
old
wish him all the
chestnut.
best with that. That old chestnut, that old chestnut. Um, but we'll get things started. And hopefully get through this as quickly as we can. So we've quite a bit to get through, as you'll see by the agenda. But really, the learning points or what we want to kind of discuss today is kind of how you use this period now to get yourself ready, and what maybe you should be looking out for coming into what is the latter half of the year. And then looking forward to maybe to 2026. So we're going to try and just give a bit of insights around that. So just a word on us first. Essentially, we're not your typical accountants. Like, we tend to work with accountants, our clients who want to be a bit more growth focused, a bit more ambitious. So really, what we want to do is work with business owners who really want to understand where they're doing well in their business, and likewise, where they can improve certain things. So that's really the insight and the kind of partnership and advisory services that we want to provide our clients. Um, it's not really just a matter of filing returns or ticking boxes. It's more towards us becoming kind of a bit more embedded with the business owners, and more of a partnership to actually drive the business forward and help them kind of succeed in their goals, or celebrate their milestones, toast their milestones, as we like to phrase it.
Yeah.
Um, just in relation to what you'll learn today, so coming into the end of the year can be difficult because you're trying to juggle kind of what is a busy period for a lot of people. Then you're coming into holiday season. It can be more difficult to get things done and over the line, and you're probably looking at what you wanted to achieve the year, and maybe certain things are behind, and you want to try and kind of get everything finished before the year end finishes. Now, it can be that your company year end is there, or it's just the calendar year, or there's just other reasons why you might be coming up to the end of the cycle. And it's kind of the same for every business owner. You then throw on top of the personal aspects of it. So Christmas can be stressful getting ready for it. So it's just really to serve as kind of a point in the year where you start to take stock of where you are, and then start to do the planning then for the future of where you want to be in 2026. And really, today's topic is about building money confidence, and what you need to understand about your business and about the financial aspects of your business, which will then can be used as a platform in 2026 to go on and achieve the goals that you want to do. And like it says, really the point is to set up for a strong 2026, by using the kind of this period to prepare for it. Um, do you want to go through this one, Oisin, just and kind of maybe define what it is?
Yeah, so money confidence, I suppose it's kind of a vague term if we don't really kind of delve into it in terms of how we would describe it. So what we have down here is it's the belief in one's ability to manage finances effectively, make sound financial decisions, and take control of their money without fear or dread. Now, that probably goes without saying, for a lot of people, but this is more of I think this is important because it's not necessarily about specific policy or specific industry and the practical, thought out things in which you have to do each day. It's more about your, um, I would say probably be more intentional with how you kind of plan and how you look at your finances and when and the frequency of what you look at your finances, because we see all the time. We have a lot of clients who would come to us and they've got, they've segmented their audience, their market really well. They have a product that does really well, but what's going to let them down, or what's been letting them down up until when they've came on board with us, is their kind of confidence on their finances. Um, and as we kind of go on throughout this, we'll show how that can kind of present itself in terms of pain points. But if you're always kind of burying your head in the sand of what you need to pay or what you need to understand in terms of your financials, you can preoccupy yourself with the day-to-day needs of your business, which is obviously your bread and butter, but those will rear their hair its head later
Yeah,
on and down the
yeah,
line, and that'll cause issues. So essentially, that's something we just wanted to preface in this slide is
yeah,
it can have lasting impacts essentially if you lack in that confidence and you lack in that belief in how to handle it, and that's what we specialize in. I would say that that's
yeah,
probably what separates us, just to your point of why we're different, Michael, is we
yeah,
strategize probably more than typical accountants to ensure that you do have the belief in what you're doing, to say, okay, I will invest in this new product market, or I will
yeah.
invest in this new I don't know, building, property or whatever. So
And it's really, I mean, business owners are very good at solving problems, but you can only solve problems that you're aware of. And if you don't know it's there, then it is very, very difficult to solve. You might not understand the impact that that's actually having on your business, and therefore you can't really do anything about it unless you
exactly.
you know. So, the more you know about your finances, and the better insight that you have into them means that you can more proactively make decisions which are in the best interest of the company and are kind of going to drive it forward. So that's really what we mean by money confidence when we talk about it. Um, but then the challenges of the year end. So, I mean, look, there are certain returns and things that are kind of done towards this time of the year, and if you're not kind of proactively planning for those, and you're doing them maybe a week or even sometimes a day before the deadline, it really doesn't lend itself to a situation where, first of all, you're fully versed on what it is that's required of you. It can feel like a very stressful position to actually get the returns kind of completed. But even worse than that is there any planning that should be done in relation to how this is actually, how this is structured, or, are there any tax efficient savings that you can make prior to doing that? Those things are very difficult to put in place if you only have a week or a day to actually consider before they have to be submitted to whatever relevant authority. So probably most typically HMRC. So it's really taking that away from the deadline so that it's a much more considered and a much less stressful process. Um, and certain people seem to be of the view that, oh, that's just the way it is, and then that's just not the case. You know, you
Yeah.
have you have 9 months to file your year-end accounts from your year end. Um, you have probably at least that again in relation to your self-assessment. So it shouldn't really come down to the last week or the last day. If it's planned correctly, you can then take advantage of other aspects of it, so that at least you're aware of how much you have to pay and when you have to pay it, rather than be hit with a large bill at the end of it, and maybe an accountant's bill as well. And then that poor visibility then leads to cash flow surprises. So if you're not expecting a 10 grand cash bill or a 10 grand tax bill, and you only have 15 grand, immediately two-thirds of your working capital has been wiped out
Mm.
by a tax bill that you just weren't expecting. And you might have had other plans for that. And to go to Oisin's point, is if you are considering investing in a new van, or a new property, or whatever the case may be, that could make a significant difference in your ability to actually go ahead and do that. Um, and what's worse is the stress that would create, because there's so much uncertainty with it, that you kind of want to go on and grow your business and do things, but these unexpected events just derail all the good planning that you have and affects your morale because you think you're in one place and then all of a sudden something lands and you're kind of always waiting for this unexpected event. Um, and like I said, it really doesn't have to be like that. So that as I said, this is probably a good period to kind of try and take stock of that, and maybe look at certain things that have happened throughout the year to try and make sure that some of these are avoided maybe in 2026, and that money confidence is something that you kind of that you can then leverage to grow your business out. Just statistics, Oisin.
Yeah, so these were just kind of I brought these up into the presentation just so to give you a flavor of kind of the detriment of maybe not being money confident because it kind of feeds into everything and how you would run a business. If you're especially at the time of year where you're filing tax returns or your year end. If you are kind of lacking in that confidence and having a lot to do without the proper support, it can have real detriment not just to your business, which is kind of obvious, but also to you as a person. So yeah,
Yeah,
44% of
absolutely.
founders report struggling with sleep in a study done by Simply Business last year. Michael actually commented yesterday that he thought that was a bit low. Um,
I
yeah,
just know the
and
stress of running a business, and so that it just seems maybe a bit low, but
yeah, but nearly half of people lack in sleep, and I think in that article, I didn't really fit in with the percentages, but there was another stat of I think a lot of them got less than 5 hours a night, which I mean, I don't know
incredible.
how decision makers can really go off such little amounts of sleep. But that seems to be a very common reality for many who are in these situations. Um,
But just on that point, sorry, Ashley, not to cut
Go ahead.
across you, but I've heard another. Now her name escapes me at the moment, but you know, there's a lot of people who can say, I want to work for myself, want to own my own business. And she kind of commented and said, her friends have asked her, oh, I want to do this, I want to be an entrepreneur like you. And she's
Mm,
like, really? Are you sure? Because this is not an easy path. Like that, people think it's this glamorous life, I'm CEO or whatever. If they actually understood what it is to run a business, they may think very differently about it. Now, it is as we keep saying, it is extremely difficult to run a business even without these surprises that kind of can
100%.
crop up. And so whilst it is extremely difficult, there are things to do that can kind of take a lot some of those away,
Mm,
and then leave you fresh, like you're saying. If you only get 5 hours sleep because you haven't slept because you have an unexpected tax bill, that then has knock-on effects on your ability to actually then focus on the things that will drive your business forward and how you actually, strategize and what you actually think about. So it's not just it's the culmination of all these things can make it very, very difficult. So sorry to cut across you, but I just thought it
no,
was relevant to that point.
you're making a good point. I suppose we're not trying to say that if you're aware of your tax bill, and you're aware of what's coming out every month, that it's gonna be sunshine and rainbows, and you're gonna
Yeah.
everything. There's not gonna be one hiccup. There is kind of realities that come with starting a business and managing a business that you just have to accept. But what we are saying is there are certain things which, although kind of within themselves, they seem a bit obvious. If you keep stacking them up in terms of good habits with your financials, it'll remove quite a lot of
Yeah.
the burden, I would say, and make it a lot less of a load than
Yeah.
that. So the next one was
It's still a roller
31.
coaster. It's just not as
Exactly, exactly. So 31% of those generating between 500,000 and 1 million in revenue report disrupted sleep due to financial worries, which is sort of an extension of that first stat. And then 31% of SMEs founders report experiencing stress when filing their taxes. Now, again, there's probably a degree of, regardless of situation, you'll feel a wee bit of stress and anxiety just because it's kind of a daunting thing, I'm
yeah.
sure, for most people. But basically, there's a lot of things that can be done that we're going to get into now that can kind of alleviate a lot of this pressure and make you a better decision maker overall. I would say in terms of clarity of thought and you know not being kind of strung up with other kind of burdens that are kind
So
of weighing down on you. So, and I
yeah,
should just say before we
that's right.
continue on,
So
in the bottom corner of each slide we have a QR code. Um, if at any point something kind of rears its head that maybe you would like to ask that isn't something you would want to put in the chat box, feel free to scan that and just arrange a chat with us by booking a call because it's probably, I understand, like when you're talking about financials, it's not really something that you're
yeah.
always going to want to pop into a public conversation. So, yeah.
Absolutely, absolutely. Sorry for jumping ahead there.
No, you're all good.
Um, and just it's the to kind of expand on the Oisin's definition of money confidence. Um, it is the three C's of, well, the clarity, the control, and the confidence. So the clarity, like it says, is knowing your numbers and what they mean. So knowing your numbers is one thing in terms of, you might get a P&L or profit and loss, or, and you can have a good idea of what your sales are and things like that. But it might stop there, and you really don't kind of understand that, there's trends within those numbers.
Mm,
Is this good versus, my competitors? Am I below average? Am I above average? Am I going in the right direction? Are we growing, or is our margin? All of these things. It's if you understand exactly what you're doing, that this is what I'm talking about in terms of, if you know there's a problem, then you can fix it. But if you're totally unaware and you just look at a number and go, oh, well, that's higher than last year, or that's broadly the same, great. It's not really giving you much insight. Whereas if you know that your margin's being eroded because, the price of your product's going up, or, um, or obviously the salaries have increased kind of substantially, then that there is the difference between those two things.
yeah.
To knowing them and knowing what they mean, really go hand in hand. And then in the control sense, so building a structure and routine into the financial management. So it should be the case um, that you know, have regular interactions with somebody who can give you that insight. And it's not just a kind of, oh, here's your accounts. There's a brief conversation about your tax bill and then you move on. It really should be a partnership, and that, if you're considering anything, that you ask the question, how am I fixed? What do you think about this? Can we afford this? If we have a 10% drop in revenue and our costs increase, are we going to be okay? So it's
Exactly.
it's that level of insight that can avoid the stats that Oshin's just gone through. Some of that is derived from the fact that, there isn't that level of understanding, or reassurance that, no, if we buy the property, or we buy the new building, or we buy the new asset or machine or whatever it is, we are going to be okay. It's
Mm,
fine. We can take a 10% drop. We can take a 15% increase here, and it's not all going to fall down. Whereas if you don't have that level of insight, you can worry about things and go, "Oh, but will it be okay? Will it be okay?" And that might lead to the stats that Ocean has gone over there. You could be losing sleep unnecessarily, and it really just comes back to the fact that you don't have that engagement, or that understanding of your numbers, and that really, then those two things together then result in the confidence that you can go buy that machine, go do that thing, take on that additional member of staff, expand into different markets, and that that your core business is going to be okay. And how long maybe it'll take you to do an expansion. Um, and it's that confidence to actually put your foot forward then and say, we can take this step and we are going to be okay.
mm.
Really is what this is all about. Next one, Ashin.
Yep. Yeah, so
Yeah, I
essentially
covered
just kind of
that.
following on from that. Yeah, so with gaining clarity, um, some of the basics here. Review your year-to-date figures, understand what drives profit and what drains it. identify upcoming payments early, reconcile regularly, not reactively, separate business and personal finances, and ask what do my stories tell. And I think for me, you know, asking, I think is the main way that you're going to gain some success, and gaining clarity, because we're not saying when we say, understand your numbers that you need to go and do an accounting course and
Yeah.
learn everything there is to know about, overheads and things like that. Not everyone's built that way in terms of how they run a business or why they're successful. You might be fantastic at making a product that everyone wants. You might be a big chef. You might have whatever it may be. Eh, Having the foresight to say, I'm not an expert in this, I'm going to ask somebody who is what will give you that clarity. It's not, wasting a lot of unproductive time and trying to
Absolutely.
make sense of something that you're not really ever going to get unless you go and study it for the length of time that it takes to become an accountant. So I think, yeah, that would probably be the one that I would focus on. You might be able to kind of elaborate a bit more, Michael, but I think
Yeah.
just having the kind of humility to ask at times, because I think especially in business culture, there's almost this thing, and you see it at a lot of
Oh,
conferences and stuff, where it's like you want to act like you belong and act like you understand everything, and it's really not realistic to be that way.
well,
So yeah.
like the good example of that is Richard Branson saying, he was in charge. I can't remember how many businesses he was in charge of at the time, but he was at a kind of quite a serious meeting,
Mm,
and he was sitting in the accountants in the room were discussing everything and whatever, and he said, you know, a guy took him aside and was like, "It's you don't understand what gross margin is, do you?" And he was like, "No, don't have a clue." Uh, and for him, it was he thought he was like, "Well, that was a failing on my part." But it isn't.
yeah.
He's there to drive the business forward and come up with a strategy and come up with the products, like Oisin's saying there. Really, should he be overly concerned? Yeah, if somebody tells him, listen, the gross margin is not as high as competitors should be, and this is what you need to do to increase it, then that's all he needs. Like he
Mm,
doesn't actually need to understand how it's calculated or any of that sort of stuff. He just needs to know, by the way, that's a problem. You can do this to fix it, and that will improve your business. Because what we hear a lot of is just what Ashin has said. If we're meeting with clients, it's almost like I'm not very good at the financial side of it, but you shouldn't be. You don't have to be. That's not your remit. That's not why you became a business owner, was to kind of have to methodically calculate things up and do all that. That what you need to do is just be able to ensure that you can get the information that you need to run your business, and what insights will help you drive it forward. Because we do find a lot of people are saying, "Well, my sales are up, um, but I don't understand, why is my profit down?" And you're like, okay, that's to do with this, and we can explain as to exactly why that might be the case. And it might be certain things like particular products you're not making enough money on, and that doesn't make any sense. And actually scaling back, and kind of knocking out particular items actually makes the business more profitable. But if you don't know that, how are you going to identify that? To you, you're like, well, we're selling loads of them. But if you're not making any money on them, there's no point in selling them. So it's those kind of insights that actually just help grow your business and drive it forward in a very kind of a much more organized and structured fashion. Um, so
Yeah.
it's not just about the being aware of all the payments that have to come up. It's kind of then making sure that the company sales are efficient and things like that. And like we're saying there, it can be as simple as a dashboard that you look at on a monthly basis. It gives you the high level information that you need. That's a snapshot to you. If you're taught how to use it and what you actually need to monitor on an ongoing basis, you can just check in on it and kind of go, yeah, okay, that's heading in the right direction. This is maybe a bit off, and what you actually need to do about it. So that's really what we're talking about when we say clarity.
Yeah.
So in relation to the taking control side of it, Um, so, you know, like I was saying before there, if you if you are finding out about a tax bill, maybe a week or a day beforehand, it's very, very difficult for a business to sustain that kind of those kind of unexpected payments. But if you know, 8, 7, 8, 9 months out that you have a, you know, a 30, 40, 50,000 pound tax bill, it's much more it's much easier for you to plan in your head and kind of go, okay, I need to set aside, you know, 10,000 for the next 5 months to actually address that tax bill that's coming in, you know, I don't know, March next year or whatever the case may be. So if you're landed with 50,000 and has to be paid next week, like what does that do to your business, and the plans that you have for your business? So really, that level of control where you know exactly what's happening, is invaluable, the stress levels are concerned and the impact that it can have on your business. Now,
Yeah.
the second one I think is one of the most important things, and it is very, very difficult for business owners to get used to this. But credit control and cash collection is probably one of the most overlooked, um, aspects of business. Sending out invoices and getting sales is great. Like, and you've done the job, and or you've sold the product or whatever the case is. If that money isn't hitting your bank, then it is no good to you, because there are implications for you. You know, you might have had to, you know, buy the products, so you've already had to shell out money to actually, make that sale, and then our customers just not paying you. So if you're not proactive on those sorts of things, or you're not aware that you haven't been paid on particular jobs, or it's going out of whack, you know, it can then give difficulties with cash. And then particularly if you compound that with an unexpected tax bill, um, the two things can interact to actually then, I mean, look, the biggest point of failure for any company is that they run out of cash. So it is so important, and that's why where the phrase "cash is king" comes from, is that if you control the cash, then the business has the best chance of survival. It's not to say that there aren't other things that put businesses out, but by far and away, it is the single biggest reason for business failure. Um, and then adding into that the controls in terms of, you know, setting a budget. So maybe at this, you start looking for a budget for 2026. What level of sales do you want to achieve? You know, what do you want to spend in relation to certain aspects, if it's advertising or, staffing or whatever it is. Then you can actually, on a month to month basis, just, look at how the budget is performing. How are you against sales? Are you up? Are you down? Are you ahead? Are you whatever? So that you have the insight to know, okay, we're tracking according to budget, or we're slightly ahead, which might give us a bit of headroom for a quiet period, maybe that might come 3 or 4 months down the line. Um, so that level of insight and forecast, so that you kind of know, are we heading towards our goal? You know, if you want to do, I don't know, 1 million or 2 million in sales, what does that break down as per month? How much do you actually have to do, to actually achieve that? And what might that result in terms of profit for the business? Those are all things that you can ask for, and basically, um, you know, it's something that will give you that level of money confidence that we're talking about. And again, then building on that is creating a routine in terms of the financial check-in. So, if there is a budget, you know, sitting down and saying, right, how are we going, versus budget? You know, how much money are we owed from our customers? You know, when is our tax bill due, or when are our tax bills due, or and how much is due? All those sorts of things will give you that confidence then that you know exactly where your business is at. And again, just makes it a bit less of a stressful, situation. You know, as I said, running a business is stressful regardless. Never mind having to worry about all those things as well.
Yeah.
Um, so do you want to do the confidence then, Oisin?
Yeah, 100%. Hopefully I don't cut out like I did the last time I was speaking. I don't know if that came through, but yeah, sorry about that. So yeah, build confidence is essentially kind of like the last step. So turn insight into action. So the first kind of 2 points that we had went through, that was kind of setting the foundations in place for you to be able to see those insights. So um, essentially, if you have an accounting partner, say like ourselves, who offer those regular, we do a lot of quarterly reviews, for example, and we give a lot of kind of benchmark analysis with our clients to give them, the insights that they need. That means then you get these insights regularly enough then where you can say, okay, now that I have these numbers in front of me, I know exactly what I can spend without kind of putting anything in any kind of jeopardy. Let's actually do something with it. So it's basically taking that step, um, like a probably in a kind of colloquial sense, it's like a kind of an educated guess or an educated kind of gamble where, you're essentially you have the data to back up your decision, and that way you know that even if it doesn't pay off, because let's be honest, there's certain things that you might want to invest in or expand in your business that aren't going to work. That is the reality of any business. And it's not a guarantee that whatever it is, if you are to open up another store or you um, buy extend a product line and enter into a new market, that it is going to work. But if you have the insights that have backed up that if this doesn't work, it's
Yeah,
okay, then why would you not do it? If your goal is to grow as a business, these are the kind of educated gambles that you
yeah.
should be taking. And
It's just increasing that level of probability that it
exactly.
does
So,
succeed.
and the more, yeah, exactly, like just exactly what you said. If you do enough of those, you're guaranteed that one of them or several of them even can pay off because the data backs it up.
Yeah,
Which kind of I've kind of just spoken ahead of myself because the next one is plan around real data and not assumptions. So again, kind of to that point, you're making these decisions based off the fact that you have the capital to kind of sustain yourself. You're not gonna, end up in debt or, having to kind of restrict yourself in any way because you've done the work with a partner to ensure that you've researched everything adequately. Checking your progress often. Again, it seems self-explanatory. It is a bit obvious, but the obvious things are what make successful businesses, and I think that's pretty fair to say. So once you've made your whatever action it is that you've wanted to do that maybe you hadn't been confident enough to make in the past, check to see, okay, how is this working? Are we fine? Can we continue to push on or invest, say, a little bit more marketing spend into kind of promoting this new product? Is that working well? Is it getting to a point where we're actually needing to kind of rein it back a bit? And this is where having a good partner can help you a lot with that, because if you have kind of advised them that you have a certain goal in mind that you wish to kind of pursue, this kind of back and forth then after you've kind of made your inroads towards it as what will help you kind of assess
yeah.
whether you should kind of press on or rein it back. A lot of it's just kind of finding that like happy middle ground, I would say, where you know that you're kind of financially secure enough to continue on, but you're not rushing into anything or making any great um taking any great risks, I should say.
Hmm.
Build a financial rhythm. This kind of comes with practice, I would say. You would probably be better than me to explain that one, Michael. But with building a financial rhythm, it's just getting into a good flow of when it is you check your numbers, look at your dashboards, meet with your financial accounting partners, check in with your team. Because a lot of it, again, I've just done the same thing where I've went ahead of myself. Sharing what it is that you want to do with your team and your workforce is a real confidence driver. Because if you
Yeah,
are sitting there as the founder of a business, and the decision maker, and you're keeping all of your doubts, plans, your aspirations, your hopes, your fears within, it can be a very lonely place to be, and it also can lead to you kind of missing out on things. And sharing it with the people that you kind of work with, your management staff, all the way down to your entry level
yeah.
staff, that can do a lot to both motivate them and to give a bit of morale and kind of keeping them involved. And it kind of goes back to our previous webinar about retaining top talent. If your workforce can see your vision, it does help in terms of driving it forward. Because it just means that, we're not all just coming on, sitting down every day and getting through our tasks for,
Yeah,
for money's sake. There's an aspirational goal to it, so it kind of helps drive that forward. So yeah, and
yeah,
just like we have,
and like there's two aspects to that, which is probably the goals, and in relation to maybe the short term, but
Mhm.
then there's the longer term. Is what are we trying to achieve? What do we want to be? Do we want to be the market leader of a sector, in a region, or whatever the case may be?
Mm.
So there's probably a really kind of long term view, but then there's the steps that are required to kind of you know head on
Get you
on
to
a
that
path
level.
towards that. Yeah, exactly. So it is, and you if you're not sharing that picture with the rest of your team, then they don't really understand what it's all about or why you're making certain decisions that you are, and you would get much more buy-in if they're kind of wedded to the same vision that you have. Now, I'm not saying they'll be exactly the
Mm.
same, but everybody wants to be part of something, and that they're kind of progressing and growing, and that that can really motivate teams. So sorry, Oshin. No,
No, no, you're fine. I mean, I think it's a very pertinent point. Now it may vary from industry to industry, obviously, but like even with ourselves at Toast, like Michael and Stephen do a lot to kind of share the goals of the business, and the kind of aspirations of Toast with us a lot, and it kind of helps, center, our focus in terms of, how you approach your work, in line with our team values. And I think that it can kind of get lost in sort of, being a bit like quote unquote cheesy, or whatever. And to an extent, it is like, we can't really say it's not, but it does definitely help. I mean, look at sports psychology, football teams, rugby teams, whatever sports team they may be, they tap into that a lot because that is the way
yeah,
group mentalities work, and it does help follow the direction where everyone's pulling and towards a goal. Now, whatever that goal, what that goal may be, will vary, but it doesn't hurt. And listen, we're not saying, tell them exactly the monetary goal that you want to
yeah,
hit this year because it might not be relevant to your business. But even just something as simple as saying, look, we want to get to a point where, all of us can, like say you're a startup, or say you're, a company that has very kind of um like wholesome goals. Like, we want to get to a point where, we want to take everyone on a weekend away at Christmas to celebrate all your hard work and stuff, but we need this buy-in because we need to hit this goal. Things like that. Like, it's that whole carrot and stick ideology, and it does work.
yeah, yeah,
Um,
yeah. No, it definitely does. I'm gonna kind of speed up because I'm kind of conscious of time, but Um, these really are the probably the quick ones in relation to, as we said, we're coming up to the year end. Is what actually you should be maybe thinking about, either to ask your financial advisors or whoever they are. And maybe it's too late for this year, but it's something that you can do then for next year to make sure that you don't miss it. So just very broadly, the middle one is probably the best one to focus on for the minute, because the pension contributions kind of dovetail alongside that. So just making sure that your salary and dividends are set up in the most tax efficient way. Now, that is probably one of the most common questions that clients are interested in or ask about or whatever. There is no fixed answer to that. That will very much depend on your personal circumstances, the circumstances of the company, your family units, and various different other things in relation to that. So how much you want to grow the business. So it's there people think that this is a formula, that if you put it in, it'll tell you exactly what it is. There's a whole load of different strands that go into that, and that's why we approach things from a holistic point of view.
hmm.
Okay, look, where do you want to be in 10 years? What are your growth plans? What do you want to do? Do you want to exit the business via sale? Do you want to provide an income for yourself and your family? Do you want to just, is it a lifestyle business that sits alongside your normal and it just gives you an income? Those things make a difference. Then, do you own any property personally? Do you have other sources of income? Are you employed? Are you um, do you have any other dividend income? Do you have any other investments in other businesses? All those things build up a picture towards what that salary and dividend structure should be. So if anybody tells you the most tax efficient salary is this,
Mm.
that is a myth, because it very, very much depends on your own personal circumstances, your goals, your ambitions, and what the company, how the company is fixed. So just making sure that that is the optimal situation for yourself. And just asking the question and saying, look, are there any tax efficient ways to structure this a bit better? And it can cause a discussion just about that. And then second to that is, if the company is doing particularly well, it can become that the tax then becomes kind of quite a relevant problem, both from a company standpoint and a personal standpoint, which is, it's a nice problem to have, but with some sensible planning, you can minimize it. It's not, it's to use the various different reliefs that are available under the tax policy to actually make sure that, that you are extracting the maximum value you can out of the business for whatever it is that you want to achieve. So, like we were saying, if your goal is to get the company as profitable as possible, to sell it off into the future, taking £60,000 out and putting it into a pension is maybe not the best thing to do. But if you're a higher rate taxpayer, you're taking quite a lot of salary and dividends, and you're 100,000 and you have three children. If you tip over that 100,000 mark, you might end up losing any childcare entitlements. You might start to lose your personal allowance. In which case, pension contributions can mean that you don't fall into what they term as a 60% tax trap. So above that 100,000 is a very it's a very tax heavy area, and not, a lot of people trip over onto it and don't really realize that they're there.
Yeah.
And then all of a sudden, their childcare bill becomes nearly 40% more expensive, and they don't understand why. So it's those sorts of things that, if you're forward planning, you're aware of it, and you can take steps to mitigate that, and actually mean that, that it's retained. Now, it might be the case that, if the business is very, very profitable, that you can take, a huge salary, huge dividends, and a huge pension contribution, and that's the best way to do it. But again, like I said, it's a very case specific thing. So if anybody tells you that there's one solution and that's it, it is a myth. Um, and then what goes into that is, just like I was saying, is if you have a quick year-end catch-up, to make sure that, the goals of the business, how these things, so likes a pension contribution, salary, and how much cash is in the business, that and any other aspects of the business are actually um, communicated to people that are advising you, so that they're aware of what you want to do kind of currently, but what you want to do in the future. Maybe that's, 12 the next 12 months, the next 36 months, or even, into the next 10 years. All of that is relevant. And then, people can, or it really does frame the best advice for you. Um, just quickly, I'll run through the mistakes to kind of avoid. So, overly complicated systems. Like, this should be relatively straightforward. It isn't, this can seem overwhelming to a business owner, but, there are particular ways you can set this up where it's maybe not, it doesn't need to be as daunting as what you might foresee. The second then is ignoring the cash flow planning. Like we're saying, unexpected bills or not chasing your cash inefficiently, that can result in stresses that potentially can be avoided. So really, the cash flow planning is probably one of the key elements to it, both on the sales income to make sure it's coming in fast enough, and also on the outgoing side to make sure that that there's not too much leaving the business, or if it has to leave the business, that it leaves the business at the right time. So, and then kind of on the other side of that is if you're leaving those decisions, so in relation to the salary and the dividends and the goals of the business and all that, if you're leaving all that to your accountant, then your accountant may be unaware that there's certain kind of things that you want to achieve over a period of time. So they're giving you advice based on what they think. But you really want to be an active partner with your accountant, and that they're aligned to what your line, where your goals are, and they know exactly where you're heading. So just assuming that they're on top of everything is maybe not the best assumption, because like I'm saying, your personal circumstances and your goals and ambition really frame how things should be set up. If you want to invest in property and you're not interested in pensions, like that, there's a completely that's totally fine, but it's a completely different structure as to how you do that. And then relying on historical data. So, I mean, whilst the past is very good in terms of the trends and all that sort of stuff, like we've gone through quite a turbulent period. So you had COVID, and then you've the cost of living crisis, and you've the changes to the budget. There are those events that are going to skew that historical data. Hopefully we don't have a repeat of COVID in the near future, and hopefully, the cost of living crisis and the inflation rates are behind us. Not a certainty, but you would like to hope that. So those are going to be factored into your figures over the last 5 or 6 years. So the historical data only tells you so much. It's unlikely that you're going to have a shutdown event um, like COVID caused. So again, you have to kind of bear that in mind when you're looking at some of the data that you have. Um, and then if you're avoiding uncomfortable conversations, now whether that be internally or externally, maybe with, particular suppliers, if they're not kind of giving you the best prices, or there's customers not paying, like that, those are awkward conversations to have with your customers. But if you're not approaching them and saying, look, I sent you an invoice for 15 grand, like it could mean the world to you. And to them, it might be the case, well, I needed a purchase order number and I don't have it. And I can't pay you unless I have that. And you're avoiding having that conversation. You get them the purchase order, and then 15 grand hits your account, a week later. Like, those sorts of things. For you, it might seem like a very difficult conversation, but to them, it's procedure. And, it can mean that there's just, if you don't have that conversation, you may be putting it off, then, it can roll on and roll on, and you never get to address it. And then if you're treating tax as a surprise, I mean, that is, I think we've hammered home that point enough, is that, look, it doesn't have to be that way. Whether it's payroll tax, or it's VAT, or it's corporation tax, or it's self-assessment, there are kind of appropriate deadlines. It shouldn't be, very, very short notice of a tax bill that has to be paid. It is possible to have those months and months in advance. And that's really what you should be looking for, to avoid the stresses of running a business. And then, like I've kind of touched on earlier, is only focusing on revenue. Revenue is great, but if you're not making any money for selling those products, so if you're selling a product for £100, but it's costing you 99 to make, really, is there any point in selling that? You're much, much better looking at, selling something for £80 that costing you £40. And it's those sort of insights that actually um, will then grow your business. Now, your revenue could look great, but if you're paying £99 for that product, your net profit's going to be terrible. And that, you don't need to understand how that works, but you need somebody to point out and say, that product there is not making you enough money. So get rid of it, focus on these ones here, and actually just buy more of them. And that can be a very, very simple change, but make your business much more profitable. And then, like we're saying, waiting until January to assess your finances. As quarter 4 of 25 is ending, really what you probably want to do now is start putting these provisions in place, start planning, so that 2026 gets off to a good start, and that you map out exactly what it should be and what you want for your business for 2026. So it is a good time to do that. I mean, if you wait till the new year, the business starts up again, and you just get dragged into the day to day, and you never really get to do it. So, it's really a good time to actually do that. Um, and then like I'm saying there, these patterns and trends can then give you the insights to power then on into 2026. So if you know exactly where your figures were in 2025, what went well, what maybe can be improved on, that can then give you a growth lever to actually go on and leverage that and make 2026 even better, or much more aligned to your financial goals and your strategic goals. So if it is the case of, like Oisin was saying, if you want to open a new store or expand into a new market, that you have the trends in place, and you know the patterns that have emerged in your existing core business, and that they can support then to make sure that you go on for your other strategic goals, and then using metrics to track the progress from quarter one. If you aren't able to identify where you're at, it makes it much more difficult. If you're flying blind, it is
Mm.
much more difficult to land a plane if you're not able to see it. So really, if you have a budget and you know where you are per budget, so by February you look at it and you say, okay, we're 5 grand behind, but it's okay because our sales are starting to trend upwards. It's fine. And by the end of February, we should be back on track. You look at it in February and look, you've recovered the thing, you're back within budget. And then in March, you're starting to exceed. But if you don't know that figure until June, it can be very, very difficult to actually fix a problem that occurred in January, and
Yeah.
then try and make up the budget, in which case your financial goals will be shot by the time you get to June. Um, so it really does help if you can measure what you're doing. And again, it doesn't have to be on you. It's the systems that you can put in place to make sure that you do have that level of insight and you do have the metrics that you need to drive your business forward. Uh, so finally, do you want me to do this one, Ashin, or do you want to do that?
Yeah, I mean, I can touch on it. I mean, it's stuff I've kind of said throughout, as to why we're kind of different from probably most of the accountants that you would typically see. So, we help ambitious business owners, pretty much every single day. Or I would say on our entire client base is are pretty ambitious with their goals. And we do that basically with the stuff that we've covered, and a lot of it, again, probably in a vacuum, they seem pretty obvious, but you would be surprised that the saying common sense isn't so common.
Mm,
Some of the things that can really elevate a business and give it the best platform to grow isn't really commonly done. I would say it's pretty fair to say. So we do that basically by creating a lot of proactive financial habits of our clients, be that regular reporting, getting them on for quarterly reviews, giving them benchmarking with rivals and contemporaries and things like that. We provide clarity with visual dashboards. So regardless of your level of kind of understanding going on, we can, essentially give you the knowledge to understand the dashboard and kind of tailor it to your needs. And then we can kind of help you then kind of make sense of it and then check in with you, where you understand everything. We align your finances with growth strategy, which we kind of touched on in a previous slide. That is a lot of what we do. So, if you have a goal in mind, we'll kind of tailor how we approach, communicating your finances in relation to that goal. So, if you're not hitting a certain amount of revenue or sales in a month, let's say, you're not going to hit the goal, the threshold that you need to do this goal that you had set out to us when you came on board. So we always kind of use that as kind of the North Star in terms of how we report
mhm.
to you, in order for us to show you where you're at, tell us your goals and what it is you want to do, and we'll base our kind of service to you around those goals, which is
Yeah,
which is quite good. And yeah, like I said before, we plan for future growth with regular reviews, which we do quarterly, and then we always keep our clients ahead, with compliance deadlines. So there's never a situation where kind of someone's served up with a huge tax bill a couple of days before a deadline. We're always really on top of that, and to be honest,
Yeah.
that's the bare necessities. But again, something that's not often the case.
Yeah.
So we're very much the mindset of get the stuff that you have to address out early and be aware of it early. Then we can get into the fun stuff and start, really being that kind of advisory aid that kind of sets us apart and can set you apart from your kind of competitors. So yeah.
Yeah, and like Oisin saying there, it's really built for the individual business needs. So some might be VAT registered, some might not be. Some might need kind of weekly insight, really, or sometimes daily. Sometimes monthly is fine, or in some instances, quarterly might be fine, and that they have an internal finance team or something like that. So it really it does differ business to business, and then obviously industry to industry as well. So there's no kind of one size fits all as far as that goes. It really depends on the business, the goals, and where they want to take the future growth. So it can be built specifically, or we always build it specifically to be honest. And then
Yeah.
that filters through then into the compliance. So most of the businesses that we would deal with would probably have payroll, VAT, corporation tax, and self-assessment to consider, but some don't, just by the way with the way that they're structured. But really, the compliance deadlines. Particularly, let's say with corporation tax, we would have a meeting ahead of that so that we could provide an estimate of how much the corporation tax bill is, discuss that with the business owner, and make sure they're aware and what steps they could potentially take to reduce it. If they want to take the steps, great, that's fine, and it minimises the tax bill. If they're not in a position to, then that's fine. But at least they have the clarity in relation to here's your tax bill, and by the way, it's not payable for another 10 months. Um, so they have that level of kind of foresight that, for the future, which really does help with the cash flow forecasting. But a lot of it is bespoke, depending on what our customers need. And listen, sorry that like we've literally just gone into hour marks. So thank you very much for listening. We do hope you found it useful. Keep an eye out for your next event because we are going to continue on series of particular topics and themes. If there's any particular themes you would like us to cover, let us know. And obviously, then just keep an eye in your inbox over the next few days. There will be a guide in relation to the employee perks and tax implications. And listen, thank you very much for listening.
Thank you, guys.